Our MarketsWiki Questions Exploring Financial Technology interactive video series examined the intersection of technology and the financial markets by posing 7 critical questions to dozens of market and technology experts. For our culminating event in Chicago, we've invited 7 of these experts to further investigate these questions.
When they asked this question to me, which was to look at places within the transaction chain where there's money being lost or inefficiencies, to me it was kind of like taking, going online and looking at Google Maps and going all the way back to where you see the world and then deciding which intersection where you're going to go to. Right? So there's a lot of different ways in which you can look at this problem. And anybody who answers this question would come up with multiple different ways to do it, but you do it from your own experiences and things that you know. And so when I drove down into this question and looked at it, I said, well, how will people define the transaction chain? And typically you get the answer of, well, it's I enter an order, the order is fulfilled, I get confirmation of that, it's over, right? That's not the end, right? We all know that that's not the end. If you were to take another example outside of the trading world, outside of capital markets, and look just at the use of a cell phone. When you pick up a cell phone and make a call, let's say you call your spouse, you talk to them for 5 minutes, you hang up the phone, the end of the transaction has happened, right? You picked up the phone, you made the call, had a conversation, click, you're done. However, the provider that you were working with to provide that cell phone actually tracked who you called, when you called, where it was to, where you were from, what rate I should charge you, right? And then at the end of the month, billed you. And what's always amazed me about trading is that it's always driven by data and research, right? You're looking for the best algorithms, you're looking for the best data, the best research to make a trade that is going to make money for you or to help your clients make money. And there is a huge amount of data that sits in all these organizations who are trading, and it's outside of the sort of day-to-day front-end world that could give them information or provide better service to customers, yet they ignore it. And it's in the back office. So as I start to narrow down my Google Map vision of where that intersection is, for me it's the back office. And I have to give you a specific process, not just to say the back office is bad, but to say, give you some examples of a specific process. And so I looked at that and said, all right, very unsexy topic, right? I'm not going to talk about high frequency trading. I'm not going to talk about algorithms. I'm not going to talk about connectivity to an exchange, et cetera, et cetera, et cetera. What I'm going to talk about is when all that's done, there's information that needs to be processed on a nightly and monthly basis that could provide great insight to you and your customers, but folks generally ignore that information. In fact, when you talk to folks, they say, oh, that's a back office problem. My sister-in-law takes care of that overnight. Or, my brother-in-law's friend from years ago couldn't get a job, so he's in the back office. He does this overnight. And when I wake up in the morning and look at my screen, all the data's right. Trade's cleared, positions are fine, I don't have to worry about anything. It's a short-sighted attitude, in my opinion. And so let's talk about that specific problem and in 3 ways. Let's narrow down the problem. Let's talk about what is causing it to be worse. And if you solve it, what can you do for your business? So narrowing down the problem, again, what I'm going to talk about, and I want you to remember one phrase, is that pricing and billing should be strategic and not an operational or accounting function alone. Think about that. All right. So as we look at billing, and let's further break it down. I had to not only look at an intersection, but I had to say, okay, what geography are we in? So we could say, are we talking about futures, options, equities? Let's choose equities. Let's choose broker-dealers, agency broker-dealers, who are consummating many transactions, in fact, millions of transactions every day for their customers. As that information is flowing through, they, at the end of the month, have to bill that customer for all that data. And there's a lot of information in there that they're missing. And what are they missing? Well, in the past 10 to 12 years, you've seen, as we talked about before, market structures change. Huge fragmentation in the equity markets, right? 10, 12 years ago, NYSE and NASDAQ made up probably, 90% of equity trading. Today, neither one of them, I think, is greater than 20%. And there are a number of exchanges or venues that you can trade an equity on. ATSs, ECNs, dark pools, et cetera, et cetera, et cetera. Each of them have their own unique pricing patterns. Then you get to complexity of things like liquidity. Did I add or take liquidity? So am I getting a rebate, being charged a fee? If I'm trading options, is it in the penny pilot program? And what is the fee on CBOE for that versus somewhere else? All those things matter in terms of pricing, because the complexity of being able to actually look at what I should be charging my customer is no longer a process that can be handled very simply by a spreadsheet and a couple of MBAs in the back office. It becomes a very tough process. In fact, we've seen a lot of organizations where the bill for something will go out 60, 90 days after the month is over. And if anybody in here has a finance degree, and I'm sure there's a lot of you who do, that's a bad working capital problem, right? So you've got fragmentation of markets, you've got complexity in pricing, and over the last several years, with all this industry built up, you've had a decrease in commission dollars, right? Trades going your way, especially in the equity world. I think some would argue in options and futures there's been some increase on the derivative markets, but in equities, commission dollars have gone down, and a lot of it's been funneled to the bulge bracket firms. So how do you as an organization take advantage of information you have sitting at your desk in order to incent your customers to do more business with you? There's the inefficiency. When I look at the question, there's the inefficiency. How can I take business, or how can I ensure and protect the revenue and business I have with my existing customers and foster new business opportunities with new customers to grow my business? All right. So we've seen examples of firms when they are unable to calculate these costs, they'll write off mid-seven-figure numbers because of the simple fact that they forgot to calculate the regulatory fees on an equity trade. And were too ashamed to go back to their customers after a year and ask for, in each case, hundreds of thousands of dollars of back fees that should have been billed on a monthly basis. That's a terrible waste and inefficiency. Terrible. Now, what's also happening is that as customers are getting more sophisticated, just like you with a cell phone. So go back to my cell phone example. If I told you like it was 20, 25 years ago, and there's probably some people in the room remember you had to have a hardwired phone in your car, right? And it cost you a lot of money. And every month you looked at it and said, boy, it's $1 a minute. Is that really worth it? Or you got a bag phone. Remember the Ameritech bag phones? You plugged into the lighter and you maybe made a call because it worked. They'll cost a lot of money to use this on a daily basis. And so there had to be a mechanism to charge back that cost. And in this situation, it's the same thing. As the complexity has gone up and the industry has driven more and more trading, more and more effectiveness on the front end, and all that money, we've heard a lot of the stories today, all that money is going into the front end. What are you doing with the back end here? All right, so customers are asking, they're saying, hey, look, I'm willing to pay you to transact with you as a broker-dealer. Remember, we're an agency broker-dealer. But I'm not willing to pay you a straight flat fee because I don't know what's built into that. I'll pay you 20% above your cost. And I've seen situations where very, very large financial institutions couldn't take on customers simply because they had no way to calculate the cost and add a charge to it. That's a shame in this world, right? Where we're trying to drive new business, drive new revenues, and you can't take on a customer because you can't do a very simple back office process because you've underinvested in that activity. All right. So let's assume then that you invest in those activities. What really at the end of the day is the benefit of doing so? Well, first of all, I talk about it, and it is transparency. I can take on those customers. I can give them information. In fact, I can provide them information on a daily basis to see exactly where their costs are. So I start to build customer loyalty, customer satisfaction, which again, in this world, for any business, is incredibly important. But more so than that, what's really interesting is that, as I talked about before, billing becomes, or pricing and invoicing becomes strategic. And the reason why it becomes strategic is now that if I have, as a sales trader, this information at my fingertips, and I've got a pricing model with a customer that says, hey, look, the more business you do, the less money it's going to cost you. Tiered pricing, right? Just like you do with cell phones, they got different pricing for the weekend, and you call your family versus friends and all that kind of stuff. Well, it's the same thing. However, in this industry, no one knows where anybody is in a given month in order to call that customer up and say, hey, you're 5 trades away, 10 trades away, whatever it is, from meeting these breaks and actually being charged less money. If you can use that information to drive business, to drive customer loyalty, you're better off. And unfortunately, as you narrow down Again, I take this big question, narrow it down to just one very specific function for one very specific group. You find that we are not doing a very good job as an industry of this back office accounting process and missing great opportunities to put good money to work, automate some processes that should have been automated 10 years ago, and drive more business for your own company. The reason why I chose a story and talk about it in this way is not necessarily to have you walk away and say billing is the one thing, but is for you to look back and say, okay, if I look at the whole transaction chain and really open my mind to where it starts to where it ends, what can I look at in my business to improve that process, to automate some things that should be automated, and possibly look at it as a way to generate more business and revenue for my company?